Hey everybody, it's Jason here with Level Head Trading, giving you an update here on Tesla. And I know it's been a while, but here I am giving you my technical analysis. Again, this is just my opinion, so take it for what you want. So I got it on the daily chart here, and it's chopping around uh, all over the place. So pretty difficult to get a grasp on everything. So what I did is I drew, to me, the most important lines as far as levels. So we have the low that we reached on April 22nd. Okay, so we got down to 138.80, and then we just went straight up to 198.87. So we have that range. If we were to create a daily bull flag from the low to the high, what you would want is to not give back more than about 35 to 40% of the entire move. And that would fall around this area right here where I'm at, which is about 175. So as you can see, we tried to push up here and then we pushed below the 382 retracement level, pulled down to here, retested, tried to get back up above the 382 retracement. Notice this candle we could not get over, and then we gave it all back in the next 2 days, which is bringing us currently to today, May 23rd. So if we're not going to hold a bull flag on the daily, meaning that we would have need to hold around 175-ish, then the next level of retracement normally is going to be 61.8. So I put this target here. 162.19 is approximately giving back 61.8% of this move from the low to the high. And so I think it's fair to say that we will probably come down and start testing that level. So now the lines that I drew coincidentally line up with that 618 retracement, which is right here. Notice you have these areas right here. Now, this in the past has nothing to do with the 61.8 retracement. But in the current time from this day here to the present day, that is where I'm measuring the 61.8 retracement, which happens to align with these levels right here. So if we could hold that, then more than likely we would then go into an equilibrium back and forth, I would assume, meaning that this is the most recent resistance at 186.88. And we don't have a support level established at this point. We just took off, went straight up, pulled back, lower high, and now we're pushing back down again. So now, if I go back in time, these lines are very interesting. So again, this 162 level lines up with this little structure right here. And if you notice, it dipped below, nearly coming back and filling up this gap. Now, we did come down eventually and fill this gap on the low right here. So this bottom line is the low that we reached coming into this area right there. So I believe that is the low, that price area, about 138, 139. And if you go back even farther, I was talking about this when I made my video saying that I believe that Tesla would come down and be a buy in the range of 150 to 120. And that goes all the way back to this structure. So again, the bottom line right here is the most recent low that we reached, which came into this structure, which goes all the way back to 2020. Now, this played out over 3 months. This took 3 months. If I go back to approximately here from August of 2020, and then when you finally broke out and got above the high here, that got you to November, right? So August, September, October, November. It took 3 months of this consolidation to play out, and then that's when it took off. The longer something stays in a confined range, then the bigger the explosion to either the upside or to the downside will occur. When something stays in an area in a tight range, I mean, this wasn't very tight, but it took 3 months of basically ping ponging back and forth between 165 and 110. So it's a very big range. And as you notice, the range got smaller and smaller and smaller and smaller and smaller and smaller. And then that's when the move started to occur, testing the high and then breaking out. So that took 3 months to play out. Because things are so dramatic recently, I feel that it's more than likely that we are going to be stuck in this range. I mean, if you go back to this area here, if we pull back, we're going to be right back into this range. So the low end of that is basically about 160. So just to keep it simple, 160, if we can hold in that vicinity, that would be the 61.8 retracement. But the one concern that I have is the gap right here. So we came in and we filled the gap going back here and going all the way back to this area. See that little space there? So most of the times gaps get revisited. They end up filling up that space at some point in time. It doesn't always happen, but it happens more often than it doesn't. So the one thing that would concern me, that does concern me, is the gap right here from 147 on the high side and 157. So there's a $10 space that we could revisit and fill back up. So I have a position right now. It's not very large because my position is long term. This is not a day trade. It's not even a swing trade. It's just getting my feet wet. And it's a position I want to hold until I get significant gains, like at least 35 to 50%. But that should probably take months to play out that way. So I am concerned about this gap right here. So that is where we stand right now. The other thing to make a note of is on shorter time frames, I like to use the exponential moving averages, which are these. So this is the 12, and then with that big move up, the 12 crossed over the 26 period, which is a good sign. But then, like I said, we gave a lot of this move back. We already gave 50% of it back from this move. We gave 50% of it back right here. So definitely not a bull flag. And again, more than likely, if you're not going to hold a bull flag, then you got to go down to 61.8 and then see what happens there. So we're still holding above the 12. The 12 is still holding above the 26 period moving average. But notice this daily candle that just occurred today. It's a 3.54% drop just today. I had heard there was some negative news that came out from Tesla. If I had the time, I would have looked it up to see what it was. So I'm sure that was a factor in what happened here. So if you look at the size of this candle, this is another a big red flag. You have such a great move on this one day, which was on Tuesday. Then you have an inside bar to Tuesday's candle, Wednesday. And then on Thursday, not only do you get completely out of the range of this positive day and come all the way down here testing these areas. So if you just focus on the more recent activity, that is a big red flag. You have this 3-day move, right? You have a higher low, and you have another daily higher low, an inside bar to this candle, and then you broke bull. So if it were healthy, you would at least form a candle like this, which would be an inside bar, and then you wouldn't be coming back into this range. And then you would, potentially hold this and then push back up. That would be more a positive signal. But in these 2 days, you gave back these 2 days. So now you're testing this third day of positive activity. So in 2 days, you basically are starting to approach this entire move and giving it all back. So that's not good. And we will see how it plays out. So anyway, that's my analysis for today. If you like it and you're not subscribed, please subscribe. I need more subscribers, and I will talk to you again. Have a good night.